Good evening. This is Ken Long from Tortoise Capital Management with a look at a couple ready, fire, aim techniques from the intraday trades in the chat room today. It's September 2nd, 2009. First one we want to look at is Cleveland Cliffs, symbol CLF. It's one of our favorite plays in the basic materials sector. When we have a belief that commodities are going to be in play, then we like to look at what we call a quad of four symbols. SMN, the double leveraged inverse materials ETF, which does great when commodities do terribly and materials do terribly. SPY is an indicator of the market condition. And then two large cap symbols, Alcoa, symbol AA, which is our favorite trading stock, and CLF, Cleveland Cliffs, which is involved in the basic materials in steel production. When materials are doing well, it's not unusual for one of those two companies to be the leading percent gainer in that business sector for the day. And when we see basic materials doing well and the market doing well, then we look to those two and then take whichever one is outperforming. When they're suffering and materials are suffering, then SMN, the double inverses, are played to the long side. So today what we looked at was the commodities and materials had been beaten down more than most of the other sectors in the sell-off in SPY over the last 4 days. And so the blue dotted line means we are automatically interested in it because of the prep from the night before. So what we see in Cleveland Cliffs was a minor gap down, then a harsh sell-off down around 23.68. Some buying pressure that brings it back to the gap, 24.17. Another selling cycle that takes it down to, but not touching, 63.68. So what we have is a set of rising lows here, lazy W. At this time, SPY had started to show some strength, and so on the second green candle, we're looking to frame a trade in our usual way. We're going to buy a penny above the green candle here after the higher low, excuse me. Have a green candle on 5 minutes, and we take the entry here at 24.05 with an initial stop of 0.1, risking $250, so that's 2,500 shares. We get a burst immediately that takes us through our profit target of 24.40, but it just keeps going, so we're looking to play it a little bit longer. It goes up as high as 24.60, pulls back, and we get not a particularly good fill or a good exit decision, but we're out at 24.40 for 3.5R in a matter of 1, 2, 3, 4, 20 minutes on the upside plus two 5-minute candles where we're suffering, about 30 minutes, 3.5R. On the second trade, we're looking for a re-entry after our exit. We're almost bottom ticked. We get a green candle, another green candle. We take the third green candle here, which was higher than the previous selling point. And our second trade, we get 24.45, again with a 0.1 stop. I was getting ready for a meeting, so I put a trailing stop on this rascal. And what we get is a pullback and a sell-off at 24.56 for a 1R on a short move, and then out. And then the rest of the day we watch that one from the sideline. So that's ready, fire, aim in Cleveland Cliffs, one of our favored stalking stocks in the material sector. While that's going on, Coca-Cola was the Dow leader and the S&P 100 leader on the day. It has been one of the three most oversold stocks in the Dow. It had a minor gap up and then just exploded in that first 5-minute candle. You can see the yellow zone here represents that OR5, or the opening range 5-minute candle. The dotted lines take that all the way across the day. Many times that will be an area of interesting reversal, but today it took off and never looked back. I was not particularly good this morning. I missed my normal setup here after hesitation at that 5-minute opening range candle. It takes off. This would be my normal entry. I was otherwise occupied this morning, so I missed this entry. It gets a nice bump up, an orderly pullback of two 5-minute candles. We get the green candle. I'm available at this time, so I take the entry at 49.45 with my traditional 0.1 stop on bullet, so it's 2,500 shares. We have a initial target of 50, which was the top of a previous channel. The last time it had a powerful surge, it got to 50 and then couldn't make anything more. So we're looking to retest 50 or previous resistance. We get another 15 minutes of just straight up, some consolidation, very orderly. It continues to go. We end up getting, we exit on the near the bottom tick of that 4 red candles there. Not a very good exit decision, but it was one we were willing to play with because Coke was, again, the by far largest percent gainer inside the Dow today. So we get our exit at 49.80. Again, a 3.5-hour trade in a matter of about, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, in about 65 minutes. Now, I had some things to do this afternoon. There were some, and I was not trading very well, some normal re-entry setups that I would be looking for after orderly pullbacks. I like to take the second green candle when it exceeds the first green candle. So these yellow dots are all 3 places where when I'm more in the zone and trading better, that there are some possibilities for continuations. Especially on the breakout above 50, this would have been interesting. So with not a particularly good day trading Coke, we still managed to squeeze 3.5R out of there, but you can see we left an awful lot on the table. This is one of the reasons I like trading Coke, that when it moves, it can move in an extraordinary way. So that's a quick look at 2 ready, fire, aim techniques in Cleveland Cliffs and Coca-Cola. We get into the trades for different reasons, but both are tied directly to the preparation we do every night, and we've developed some techniques and good practice on trading those 2 particular ones. So specializing in those 2 has definitely helped our performance. So thanks for your attention.